Today we have Eric Mignot, the strategic mind behind the founder of Simple. He has raised over 120 million to build Simple, the first digital insurance broker for SMEs. So welcome, Eric. We're excited to have you here.
Thank you, guys.
So I'm Alejandro Garcia, founder of Techstars Alumni and AnswerBite. My co-host is my brother Ricardo, fellow seasoned venture-backed tech founder who leads a number of powerful Silicon Valley communities, including alumni founders, including the alumni founders, a community of 3,000 Y Combinator alumni. Yes. Eric, just for you to know, our community is made up of the top 1% venture-backed tech founders in the world from both Y Combinator and Techstars. I'm going to give a little bit of background on Eric before we start, and so just sit back for a second and hear your accomplishments, and then we'll jump into the Simple. So Eric Mignot is the founder and chairman of Simple, the premier digital insurance brokerage for small and medium-sized enterprises, professionals, and sole traders, serving over 200,000 clients with streamlined access to a suite of services from insurance companies, brokers, and banks. Eric's career began in finance, where he made a name for himself as an international controller and later as CFO. In 1999, he ventured into entrepreneurship, co-founding Certant, a digital consulting firm in Latin America that's in Argentina, Brazil, and Mexico, raising $3 million from leading U.S. private equity firms. In 2001, he played a pivotal role in transforming CaixaBank's French operations. He was instrumental in a landmark merger with, and I'm sure I'll butcher his name, but Boursorama, successfully launching France's leading online bank in 2005. He also led Hiscox Insurance in France as managing director for 5 years before actually founding Simple to disrupt the traditional insurance brokerage model and set a new standard for service delivery in the industry. All right. Thank you for sitting back on that one, Eric. So Eric, your journey from finance and consulting in Latin America to digital innovation in France, can you share a little bit of like what drove you to make those shifts, particularly the leap from traditional to like the digital world?
Yes, I guess it's linked with a couple of stuff of like everybody else of your personal life, and I had a grandfather who was of the lowest social background in France, and he made himself up learning to speak English after World War II, traveling all the world, etc. So he kind of got me excited about like discovering new things and going to other geographies and being curious about the world. And that means being curious about living in Latin America for 10 years, but also being curious about working in different industries, from telecommunication to utilities, and then something that is not very sexy, which is insurance. But at the end, there are some really interesting stuff that I've learned in each one of those industries. And the name of the game for me was kind of learning and then applying things I've seen in other industries to the new industry I was, working in. And that was, I love
that. That's a huge advantage. The more you can apply all those different types of experiences together, what you've learned. So let's talk about, you mentioned insurance. So let's talk about Simple. What is Simple? Who is it serving, and what problem are you helping solve for our audience out there?
I actually plus Simple.
Plus Simple. Okay.
Yeah, as its name stands, is really like solving a big issue that a lot of small businesses are experiencing across the world. In today's world of insurance, the very small businesses, let's say 0 to 10 employees, you have almost half of those professionals that are struggling to get insured. It's a bit weird because insurance was invented 40 centuries ago. It was one of the oldest like industry in the world. It was invented by entrepreneurs for entrepreneurs to help them take risks. And today it happens that insurance in all geographies all over the world, if you're a taxi driver, if you're a construction worker, if you're a tattoo artist, then nobody wants to insure you. Basically, the name of the game for Plus Simple is to find solutions for those professionals that are struggling to get insured. And guess what? Those professionals represent almost half of the millions of entrepreneurs. They are all across Europe and all across the world.
And that's a massive, massive market. What was currently, so it sounds that for many of these individuals, it's harder for them to access insurance. Are there certain reasons for that? Are there other services out there? Like before Plus Simple, what did it look like?
So basically, what happens is a lot of those companies are struggling to get insured and may delay, their like launching their company because they can't get an insurance solution. So the reason why this is happening is that the insurance industry is very like product centric, not very customer centric, and those like small businesses are requiring a specific knowledge to understand what their risks are and to cook them a bespoke solution to address their needs. And because small professional is a very fragmented world where you have millions of combinations possible, and insurance is not an industry where technology is very developed, then you have a lot of manual processes that makes that very non-profitable for the traditional insurers with their analogical way of treating things to serve those markets. Once you start introducing technology, and technology is like industrializing the creation of bespoke solution for all those different small businesses, then this becomes a game changer, and you're able to address profitably those very small customers, despite the complexity and the fragmentation of the solution that they are requiring.
Eric, so the status quo is these small businesses operating without insurance then?
Some of them do operate without insurance, and some other are basically waiting for months before getting an insurance solution. And even small brokers are struggling themselves to find solutions for their clients because nobody wants to work with those small brokers to give solutions to those very specific niches.
Got it.
Yeah. Well, go ahead, Richie.
No, I was going to say, so you successfully introduced digital innovation at traditional complex industry. What were the main hurdles in digitizing insurance services, and how did you overcome them? You mentioned that technology, it's not the strength of this specific industry, but this specific, I'm sure, also.
And that it's helping industrialize a bespoke way.
Exactly. Yeah.
Mm-hmm.
Yeah, this is exactly that. What technology does is basically so to make it very easy to understand for the audience. What would traditionally happen is that I'm a taxi driver, I want a solution, then the small broker is gonna ask me 1,000 questions and then go to 1, 2, 3, 4 different insurers to try to get a quote for me, and then assemble the different solutions, go back to me, present me the solution. Then as a taxi driver, I would choose one of the solutions, and then the broker goes back to the insurer. So a lot of back and forth, a lot of data exchange, a lot of inefficiency, all that, maybe to make €100 commission for the broker, right, and €1,000 for the insurer, right? So it's very inefficient, it's very expensive. If you have technology, and technology allows you to only with 10 questions to get a bespoke proposal for the taxi driver. The taxi driver can sign online, pay online, be immediately insured. Then you cut massively the cost out of the equation, and you make that a profitable industry to be for the broker and also for the insurers.
And what was what were the harder parts in doing that? You know, not dismantling, proving that analog process. I'm sure that's where the biggest challenge lies. How did you pull it off, and like what were the biggest obstacles in you doing that?
Did you have to convince first and more
Right.
than any other player?
Yeah, I mean, in that industry, as we are an intermediary between the insurers and the clients, I mean, the clients were desperate to get a solution, right? And the brokers we are working with, who are our partners in that play, they were also desperate to find a solution. So the big guys that we needed to like convince were the insurers that technology actually could, you know, solve things. And let me tell you something about what I learned in different industries. Telecommunication 20, 25 years ago was a game of engineers, right? So you had to be an engineer to be, you know, a noble function in the telecommunication industry. Today, telecommunication companies are run by people from marketing that really understand customer centricity, etc. So you had a major shift in that industry over 25 years, from technical to client-driven. Well, insurance today is technical in a sense. Actuaries are the bosses. They are the one like really having the power. And then technology people or marketing people are secondary functions. You know, like it's not very nice to be a marketing director in an insurance company, right?
Uh-huh.
And so basically, when you come up with you know, like this is what customer require, and this is what technology can do, you are talking to people who don't understand that, right? Because it's not in their DNA. This is not how they have structured their way of thinking. So basically, this convincing those people that are not familiar with technology and customer centricity that this is the right way to address the market is the really difficult stuff.
And those people are the actuaries, or in this example, or who?
Yeah, they are the actuaries who are leading the insurance companies, and those are the ones making the decision to work with you or not to work with you.
And how I always love asking this question. How did you sign up your first customer? What did that look like? Who was it? Like, if you remember, first couple customers.
Yes, I had to do two things because as we are an intermediary, if I have nothing to sell, I don't have any customers. So the first one I had to convince was an insurer, and actually I knew quite well the deputy CEO of Generali, one of the largest, you know, insurance company in Europe. And I went to see him and I pitched Plus Simple, and after 10 minutes, he stopped me and said, "Stop, what do you need?" And I say,
oh, music to someone's ears. Yeah.
and I said, basically, I need your help to give me, you know, products so that I can, you know, implement my platform. And he said, okay, you will get it. So
Wow.
the guy, it was really a leap of faith, and probably without him, the journey would have been much more difficult. And then once you convince somebody on like
And that's a big brand. That wasn't like any small insurance. That's like as sexy as you can get in the insurance space.
Exactly,
Yeah.
spot on. Yes, it was exactly that. So I was really fortunate that this guy decided to take a risk with our company to you know to start the journey. And on the other hand, I realized I had to convince some brokers to work with us, and all the big ones were like, "Yeah, maybe later we'll see," etc. And then we went to brokers that were family-owned brokers, like mid-size, and those guys, you know, were like courageous enough, and no politics, you know, no corporate inefficiencies, they were the one making the decision. So a couple of them, two of them actually in the French market said, yeah, we are going to start with you, and we are going to learn together. So I had, you know, like the insurer, I had the brokers to work with, and this is how everything started.
And for both of them, you had to convince, for the insurance, you had to convince them that you can make them more money. For the broker, you had to convince them that you can make them more money. But the
Exactly.
broker, for these family businesses, what were some of the obstacles? I mean, because one thing is I can make you more money, and the other thing is based on volume versus based on, you know, a big ticket item. And I'm guessing it was based on volume for them.
Exactly. It's exactly that. What happened is the following. So it was the time where, you know, the first platforms were appearing in the market, and those guys were serving platforms with super rapid growth of like independent workers. Like one of the platform is real estate that was employing independent people, and it was growing like 1,000, 2,000, 3,000 per month, like crazy growth.
Wow. Yeah.
But with analog processes. So the guys were saying, it works very well, but we are losing a fortune. Shall we stop? Because we can't make money. It's too difficult. It's too low premium. And I say, okay, we are going to put you the technology for free. You are going to give me all the costs, and we are going to share 50-50, and the 50 you get will be pure benefits. And they say, okay, not a bad deal. And this is how
I love that. I love that. So they were already flooded with incredible business, but they were losing a lot of accounts because it wasn't efficient. It wasn't.
Exactly.
And so you came in and said, like, we'll split it 50-50. Whatever money comes in that came from us is money you were going to lose anyways.
Yes, exactly. Yeah.
That's always a great offer for someone.
They were convinced, especially, you know, for a family business, because the guy understands it. It's his own money, so it was really like it was cool to start. And my advice, actually, to founders is try to speak. If you need like B2B, go B2B, and start proof of concept. Go with family-owned businesses, because they are going to be much quicker to make the decisions.
I love that. Do you want to jump on the pricing, Richie?
No, well, I want to ask, how did you know when you hit product market fit? Like when did things started to really come together? You said, all right, I think we got something really special here.
Yeah, basically, so we started, you know, with those like two brokers, and then we started to digitize some offer for like car repair shops, etc. And the market heard about it. And we had a lot of small independent broker, actually 1,000 small independent broker in the French market that came to us and say, hey, we really want to work with you because we can't access, you know, that offer. Your platform is pretty cool. It's much easier for us to work that way. So can we please work with you? So that was kind of.
Okay. How long did it take? How long did it take from when you started to that moment?
Almost 3 years. It took 3 years.
Yeah. 3 years.
That's great.
Like a year and a half of like developing the platform, R&D, etc. And then another 6 months to launch, you know, with the partners I mentioned. And then this is where things really started to accelerate.
Eric, you mentioned that, which I love this, because it truly is the best way to have someone use what you're doing, which is I can make you more money, that like you're losing money and I can make you more money, and you can try us and it's not even going to cost you a thing. And, you know, like give it a shot. So I think any business that has that type of offer is a good start for what you're doing. Did your pricing, that type of offer that you did, which was we split 50-50, has that stayed across the evolution of the company? Was that from the get-go, like the pricing that you've had and you've maintained, or has it evolved?
It's a very good question. We see some nuances depending on the. Now we are operating in 5 different geographies in Europe, and we see slight differences in some markets. You have to give 60% to your partners. In other, like 50 or 40 is fine. So there is a little bit of fine tuning country by country, but the ballpark figure is 50-50. Yeah. And the nice thing is that. Actually, we are not. We never burnt any money in customer acquisition because we are working only with intermediated distribution, working with small brokers, and just splitting the revenue with them. So we don't incur any like acquisition cost, which makes us like profitable by design very quickly because once you amortize your platform, basically afterwards it's pure profit that you're generating.
Did you, when you said that 50-50 split, and let's say split with that first customer, right? The one that you signed up first, did the platform already allow you to keep track of I guess of the sales, and it was fairly easy to say, here's your portion, here's my portion, or were there other services that you brought in and used to help you? Because a lot of times when you do any revenue share, it can get a little dicey on what is what and who had what and when is it reported and all that stuff.
Yes. No, you're right. The thing is, the wow effect in the insurance industry that is not used to like to really leverage technologies, that you have so much data and you're able to produce like online so much data that it's kind of a wow effect, and you just give to your partner a connection, and you can see live what is happening with the platform, and so it gives a lot of confidence about our ability to produce like fair reporting on how to split the revenue with them. And we do the same with the small brokers. Actually, they are connected to our platform. They use our platform to like quote for their own clients. They get like a CRM, and everything is fully transparent for them. So like
that's
this
great.
is very easy.
No, that's amazing. Richard, you're going to ask I want to jump into platform as a service, but
let's do that.
You want to do that? Okay, cool. Yep. So platform as a service, that is what Plus Simple is. It's so just for those out there that are in SaaS and are not in platform as a service, I'll give a little quick description. So with SaaS, software as a service, you use software directly via the internet without worrying about anything else. With platform as a service, you get the tools and environment to create your own software, but without worrying about the underlying infrastructure. So as a platform as a service, you provide that infrastructure for people to then build on top of that. And that's what we're talking about, brokers. And so far we talked about brokers, but I'm guessing this expands aside from brokers as well. When it came to scaling and growing, when you hit that product market fit and now you're growing and you're growing at a fairly decent speed, I'd love to know what lessons have you learned from that scaling, and what are things that you wish you could go back and say, like, I wish we could have prepared ourselves more for this, or next time not fall under this particular, pitfall. Any thoughts on that?
Yes, there are many questions into one, but
yes.
Basically, so the setup is platform as a service, but we made it very, very, very simple. And the way to make it very simple is basically we get a commission from the insurer and we split that commission with our partner, and that's it. So we are really striving to make things extremely simple, and then our partners can use our platform and adjust our platform to their specific environment. And we work with small brokers, but also like with insurers, with banks, etc., using our platform to serve their small customers. So this is for the model. Then what we learned is in Europe, in continental Europe in particular, like going international for platform as ours is very, very, very complex. And actually, almost none has managed to do it. So we very early on, starting the third year of Plus Simple, we tried to go abroad, and we tried everything. And after
where
a
did
few
Plus
years,
Simple begin, by the way, Eric? Where was their first market?
so first market was France, and then we expanded to Italy, and then to Germany, and then to Austria, and then to Spain.
And what makes it complex? I agree with you. I could, but what's the part that makes it complex every time you're?
So what makes it complex is that the insurance industry structure is structured by country, because as nobody really managed to build a pan-European platform, the analog way to do things was to have people on the ground and work, country by country. And then you talk to those organizations and they say, I have nobody that can decide to work with you in France and Italy at the same time. You need to talk to the Italian guys and you need to talk to the French guys. And this is not, the philosophy of a one only platform serving all the European countries. So that was kind of very difficult to find a way to be truly pan-European and at the same time, work with all the local markets. So we tried a lot of things, and after some time, we realized that there was the opportunity to buy some small brokers, or we call it managing general agents, MGAs, that were struggling to scale in each one of the European countries. So we started to do M&A, and we did 18 acquisitions in the past 4 years of small MGAs that basically we buy the company, we fully integrate it on our platform, and then we internalize the know-how on how to serve camping sites or hotels or restaurants, because basically we onboarded people who have been doing that for 15 years. So it's kind of, we get the know-how, we digitize it, we put it on the platform, and then we scale on the 9,000 brokers we are working with across Europe to deliver revenue synergies.
Wow. What's the size of those, the number of agents in each of those acquisitions, an average or an idea?
Yeah, on average, they are making 1 to 2 million euro top line revenue commissions that they get from insurers. They are like around 10, 15 people. And the average age of the founders is between 55 to 75 years old. And nobody wants to buy them because like for small professionals, they are too specialized. They are too nobody knows how to buy them because nobody has our technology, right? So we are basically buying them where nobody wants to buy them, and for them it's a relief to get a solution.
It's a family business that has been, that's incredible. That's what a very smart strategy. Is this something that you foresee continuing to apply as part of your go-to-market?
Yes, because I mean, it's a win-win for everybody. It's a win for the client because basically it's easier for the client to get those kind of complex solutions as we scale the know-how of those guys that were struggling to scale beyond their regional geography, and we make them global, which is like a plus for the client. It's a plus for the small brokers. It's a plus for the insurers, and it's a plus for the seller because at the end he managed to sell his company at the one who is like 75. He was so happy that he could retire, right? So,
right.
So it's really win-win.
That's great. I love that. Do you want to talk about what you're thinking, Richie?
Yeah. Well, I actually saw the demo. You have a pretty cool demo on how it works on mobile, and if you're have a, if you're a hairstylist, you can go and, do it on yourself pretty easy, and sign up. My question is the software, so you mentioned that you're not necessarily going to the customers. They already have, so your customer is they already have a set of clients. So does that mean that your software is sort of white label in your actual customers, these insurance companies, et cetera, they get to use it and present that to their customers? So you have several brands of insurance companies using it, using the background, your
The
infrastructure.
platform as a service, yeah.
Yes, exactly. So basically, you have different. The short answer is yes. So basically, the big guys are using our platform totally white label, and for the small brokers, we give them usually it's a one man, two man or two woman show. And they are nowhere in terms of technology and having a digital channel. So in really 2 minutes or 3 minutes, they can create their own online shop with our platform that is labeled with their name, their logo, etc. And they can start trading online. In a matter of a few minutes, they choose like the products that they want to sell. And this is we started that during COVID when nobody was able to operate, and actually it's pretty successful.
That's amazing. All right. So that's the part where you mentioned, you emphasize creating a user experience on par with like top e-commerce platforms. So in many ways, like a Shopify for all the different stakeholders, they can create their own platform. Their customers get to use a beautiful interface. Okay, that's great. And how did you build it from, how do you prioritize customer needs during the product development, right? I know that you started with customer one, and then I imagine over the past years that has evolved. How do you prioritize from the customer point of view? And I guess in this case, customer means 3 different stakeholders. But
yeah, you're right. And actually, what it's word matter, and at Plus Simple we say our customer is the end customer, right? The tattoo artist, and the distributor is a partner, and the insurer is a partner, right? 2 different kinds of partners, but they are partners, they are not customers. And for the end customer, basically what we do is we it's very basic, but at the same time it's something that is not very like traditionally in the insurance industry. We think about persona, like you can be the owner of a tattoo shop and be an entrepreneur and have 5 tattoo shops, and you're thinking about balance sheet and financing, etc. This is your day-to-day. Or you may be the real artist that is a one woman show, and she's really about creating great tattoo, and don't care too much about administrative stuff, etc. So the vocabulary, the way you build the offer, etc. is different depending on who you are, which persona
Right.
you are. And this is how like we use the machine to understand who we are talking to, and adjust the offer to the profile of the client.
That's excellent.
Is there this is a little bit more operational, but is there a weekly, a monthly, once a month, the whole team sits down and you talk about the different things from the customer, like a lot of the feedback, or like what does that look like?
So it's a good one, and actually the most difficult stuff that we had to do to be what we are is to try to join 3 dimensions into one company: technology, insurance, and customer centricity, and have the 3 operate together. So we tried a lot of model, and what we decided is to concentrate that's three-dimensional stuff into our product team. So the product team is engineers that know really well about insurance and the insurance industry and listen to the customer. This is really the combination that makes it work and makes us different from the rest of the market. So we decided really to make that product team the most important team in terms of impact on the company. So it was a rational decision to give power to that team.
For founders out there that have a platform as a service, are there any pitfalls or best practices, anything that comes to mind that you advice that you might have for them of like, keep an eye on this or look out for this?
Yes. Actually, I don't know if it's a good advice, but it worked for us. Many times we had the possibility to sell our platform to IT teams. And I always refuse to do it. Either we're bought by the business with a model that is very simple, away from being bought, by a technical IT team. We are bought by the business, by the CEO, etc. We are not bought by the IT team, and we kind of lost or refused to compete on certain opportunities because we didn't want to enter that. And I'm pretty happy that we did that because it makes everything much more simple for us.
So you're saying that you could have gone the route of speaking with the IT teams on different types of products that can be developed and all that, but you didn't. You like to always stick with what seems to be the customer profile or the decision maker, which was like that CEO or that president. And you like that. You like that decision. Do you think it was because it kind of took attention in a different place that it should have gone to? Is that why?
I think it's basically our name is Plus Simple. Why is it Plus Simple? Because we want to simplify insurance. And if you want to simplify insurance, make your model. So basically, when we start working with a partner, there is no setup fee, there is no whatever. We share revenues. That's it. It's as simple as that, right? And if you go and you talk to a businessman, he can understand or she can understand that, okay, we just split revenues. That seems fair. I bring the customer, he brings the platform, and then we share the revenues. Very simple. If you go to the IT team, they're gonna talk about whatever SLA or whatever. I mean, this is not the game, right? And we don't want to over complexify everything. What we want is have something where we are totally aligned. I mean, if SLA is not good, we are losing money, right? So our incentive is that the platform works really well, and making things so simple makes it also much easier to manage afterwards.
That makes a lot of sense. Keep your eye on the prize and speaking with presidents and just what the actual business model is keeps you clear on that path. Did you raised we just have a few more questions here, but did you raised over 120 million both in equity and debt? And I'm curious, having gone through that, are there pros and cons when raising between debt and equity? Would you continue doing it one way versus the other?
Again, you're touching on something that was pretty critical in the development of Plus Simple, which is the following. Back then, in the end of 21, we had kind of a big choice in front of us. One way was to go the traditional, or at that time, the traditional route, which was a Series C, or structure something that is much more like an LBO like private equity type of
Right.
deal.
Leverage, what is it? LBO,
Buyout.
leverage buyout.
Yeah. And actually, it's not an LBO because the debt was raised to finance the M&A activity and the acquisition. So it's not like traditional LBO, but let's say on one end you had like crazy valuation, a lot of equity in, and that was the name of the game at that time. And believe it or not, but I didn't believe in the valuation that was attached to that at the stage of development where we were, because we were just breaking even. I mean, I couldn't understand because
Smart, because you didn't want to shoot yourself in the foot, which happened to a lot of, you're talking 2021 before everything collapsed and people that raised that 5 billion valuation and were generating $2 million in revenue.
Yes, exactly.
How are they gonna? Okay, so you didn't go that route.
Yes. So we decided, and that was a pretty tough discussion, internally. We decided to go the other route, which was like, we are profitable, so let's structure something where the valuation is going to be lower, but we have our VC funds be replaced by more PE or growth type of fund, and we raise the debt to finance our future growth. And we do all that at a valuation that seemed fair at that time, with like a good margin to increase that valuation over the years. And now I'm so happy that we did that. Like arbitraging the short-term crazy valuation for something that is much sounder, longer-term view was really the good things to do. And maybe at that time in the market we weren't like the sexiest, startup in the French or European market. But today, like a lot of people are speaking highly of Plus Simple because like we make those kind of decisions that were not intuitive at that time.
I love that. I love trading short-term versus long-term, because that is exactly what it is between those players. From a VC to a PE, it's a very different way in which they look at a business, and PEs look at it way more long-term than a VC would. That's really cool. Do you want to ask one last thing, Richie, or before? Oh, you're muted.
That is if I'm not on mute. Yes. From the, throughout your journey with the company, how has your role evolved, and how do you maintain cohesive culture across? I think it's 100 plus or so members, core members. I imagine, without counting the partners, which is.
Yes, I actually now we are growing fast, so now we are 200. Let's let's put it that way. When I co-founded with my two co-founders, Plus Simple, I was 45, so like pretty mature in terms of experience. And what I learned about me in like the 25 years I had worked is I have a lot of qualities, but maybe I'm not the best manager that exists, and there are much better people to manage people than I am. So basically, I asked my two co-founders. I'm the executive chairman, and my two co-founders, one is the CEO, and the other one is like a deputy CEO and heading the tech team. And I thought those guys were much better than me to manage the team. So basically, we splitted, the roles between us, so as to let me like concentrate on strategic business development, like leadership and doing the strategic and the stuff, the talking, the financing stuff. And they were like much more focused on managing the team and operations. And the three of us are very complementary. One is very knowledgeable about insurance. Anthony Sala is very, like, he was heading the tech team in the bank at Boursorama, and I was more like, understanding what clients need, and the three of us together is what made it special, I think.
I love that. Complementing one another. Eric, anything you want to share with our community? Any projects you're working on right now? Anything that a shout out to something that you're doing?
Maybe because maybe I'm I'm a bit more experienced. I see a lot of young people creating insurtech, still creating insurtech. And insurtech, there was like a hype of insurtech, and everybody wanted to finance insurtech and go into insurtech, etc. And then there was a like crash of insurtech. I mean, there are so many interesting things to do in that space. It's such a huge industry. And I firmly believe that insurance, and maybe it's going to sound a bit romantic, but I think insurance is an industry that is essential for the social cohesion of the world and countries. Why? Because it's solidarity by design, right? So if we all kind of understand what really insurance is, and I really encourage young people to do things in that industry, to reconnect insurance with the end customer. I think the world is going to be a little bit better.
I love that. Eric, thank you so much. Thank you for the time. Thank you for sharing your insights and your journey with us.
I really enjoyed the discussion, so thank you very much.
Likewise, Eric.